is this the bankruptcy of our nation? I mean, I wrote a book called Bankruptcy of Our Nation. I'm staring here at a bankrupt nation. The stock market doesn't tend to care about that. It hasn't cared about that for some time. We've been bankrupt for a while. How do you define bankruptcy? Well, the definition would be if you can't pay your bills. The United States borrows $1 trillion a year to pay its bills. That's not a solvent country. That's not a country, and that's not sustainable. On top of that, now we have our Q2 GDP, which is supposed to go down by maybe up to 50%, according to the St. Louis Fed chief, James Bullard. He's also indicated that unemployment could fall down to 30% in the wake of this coronavirus pandemic, which would be more than what we saw at the very peak of the Great Depression. So we're heading into a new Great Depression. This is a depression. There's no doubt about it. I feel like I'm standing on the beach watching a tsunami coming. And it's in slow motion. There's not really much you can do about it as a person, as an individual, except what we've done is we went to cash. The other thing that's happening right now is that in the fog of this coronavirus pandemic, everything else is hidden. They're not talking about a lot of things right now. And people who like to operate in the dark really enjoy moments like now.
Welcome back to Liberty and Finance and Reluctant Preppers. We're glad to have this returning guest, Jerry Robinson, author of Bankruptcy of Our Nation, economist and trend trading coach, and founder of followthemoney.com, is here with us again this Monday, March 23rd, 2020. Jerry, thanks for joining us.
It's a great pleasure to be here. Thank you.
You have some recognition among our following because you and your wife have moved years ago to a more rural location where you did a lot of preparedness. We've got videos and interviews with you talking with us about how it's important to prepare, not just financially, but in many ways to make your life more resilient. You also went down on record as having called the 2008 crash and having alerted your viewers and your subscribers, that is, to this most recent downturn in the financial world. Could you first start with that and talk to us about the trend as you see it? Because you've spoken with us in the past about how it's a shame when people only get ahead if there's a collapse, and that for the longest time, year after year over the past, most of the last decade, the trend generally has been up in a bull market. In fact, the longest bull arguably of all time. So have you decidedly, it sounds like you have made the call that the momentum has shifted and the trend has changed, and what do you see now that people need to be aware of?
Yeah, well, that's a great question. And first of all, just want to say, amidst all this crisis, that the very first thing that we want to be focused upon, I know this is finance and liberty, follow the money, we're talking about the economy, but there's a human toll here. And the human toll and the psychological toll as well has been, I think pretty extreme. From an economic perspective, which is one of the least important at this moment, but it is increasingly important. As we see the market, really accelerating in a downward path. I think the big takeaway here from what we've seen with the stock market is that, A, we've never seen anything like this. That's really weird to say that. That's kind of a phrase that we would often say would be said by someone who is ignorant. We've never seen this before. But in reality, when we look at the actual data, we've never seen an accelerated, sell-off 30% of this magnitude this quickly. I mean, it really did a psychological doozy upon market participants, upon 401k, holders. I mean, from people who are invested in the market. So what's interesting is that the reason we saw this coming, and by the way, we haven't been calling for a downtrend to occur, every year since 2009. I mean, we have recognized the uptrend. So as you mentioned, we're trend traders, and so we've been long this market for a long time, and it seemed kind of unreasonable because it violated our own principles of sound money and all of this. But you can't argue with the trend. Stocks were going higher, and so we traded that trend. And what gave us the tip off that this market was over was a really simple market breadth indicator that I teach our students to use here at Follow the Money. And it's the number of stocks, or the percentage of stocks actually, that trade above the 200-day moving average. And when that number of the S&P 500 stocks gets above 80%, typically when it gets above 80%, that means that 80%, or 4 out of 5 of all of the stocks in the S&P 500 are trading above their 200-day moving average. There tends to be a reversion to the mean, and you tend to get that tends to mean that you're a bit overstretched. And so we went to a lot of cash at that moment, and then we went to all cash when we began to see, the accelerating sell-off. So before this market was below the 200, we teach our members and our students to avoid markets that are trading below a 200-day moving average, right? Really, you want to look for 200-day moving average breakouts. That's from a position trading kind of idea. And so that's one of the things that we taught. And so that kept us out of this market sell-off and this market slaughter, which has really turned into. Capital preservation has its place. And I understand the buy and hold mentality, but I'm very happy to be in cash right here and looking for opportunities now.
You mentioned the human cost of this in psychological stress and in displacement, and that we have reason to believe that that's just beginning, because in a combination to what's going on economically and financially in people's lives, we also have obviously unprecedented restrictions worldwide on movement. We have close friends whose son can't return home from a mission trip overseas because of travel restrictions. We've got our own son who just made it back underneath that deadline from an overseas mission trip. We're sheltering in place ourselves. So people are under stress from a number of different directions. In fact, I've been contacted by numerous people over the past couple of weeks asking me, what should I do? My 401ks are down, my IRAs are down, and is it too late to go into precious metals into sound money? Is that sort of thing? Wishing that they had made those moves maybe a month or two ago, as we all would like to know, obviously ahead of major shifts in the tide, when the right time is to make moves. So when you look at people reaching out who are feeling rather desperate, what are some things that you've been counseling people who feel caught in stock plans at work where they can't make rapid changes? That was one that totally blew me away. There was a person who just said they asked after the first day of the market drop, could they please roll their funds out of equities and into basically fixed value and keep them within the fund. And we're told, you'd have to change over to completely different election as part of that. It'll take us at least a week to even make your account able to have that kind of switching between funds. Is that something that you're aware that people are have? What options do people have when they're caught into that feeling they can't make a move, but they find themselves feeling they're in the wrong place?
Yeah, well, I think that question sounds really geared more towards a financial advisor, and I want to stress at the outset that I'm an economist, not a financial advisor. And there's a lot of great financial advisors out there, and I think most people are under-advised, and they should really seek out a trusted financial advisor. But as an economist and as a trader and as an investor, one of the things that we stressed not only to our students, but also we did a free video on YouTube, on our YouTube channel on March 1st. And we said, look, this is probably going to get much, much worse. And there is the option. We didn't recommend anybody to do anything, of course, because we're not advisors. But we said there is a cash button. You can move money out of equities and into cash. It's your money, and capital preservation again has its place. And if you start worrying about what's happening in the market, you can go into your IRA or in many cases your 401k, and you can move to cash. Now, I guess in some cases you have to do a little bit of pre-planning on that and be ready to be able to push that button in the case that you had mentioned. But that is typically, a response that people can have. And as far as going into precious metals, I think the buy signal that we all were waiting for just came. And in fact, it just came today as we do this recording on March 23rd. And that is that the Federal Reserve has now announced the unlimited QE. And that means they're going to be buying not only, Treasury bonds across the yield curve, but they're also going to be buying corporate bonds. They're already buying short-term municipal bonds. There's really the mortgage-backed securities. I mean, they're buying pretty much everything now. And this is the moment where gold began to detach from equities back in 2008. Took a little bit. Gold fell for a little bit because everything tends to fall in a panic like this because people need cash. But then slowly but surely, if you look at the charts back in 2008 and 2009, you'll see after the big announcements of all of the quantitative easing and all of the big things that the Fed was going to do, which, by the way, were much smaller than what we see today, the price of gold began to detach from equities and it began to rise. And then it rose very dramatically. And so I would say, since we're talking about gold, I would say that gold prices, I believe, have a much, much higher price. And I believe that at the beginning of 2020, I had no clue that we were going to see this kind of market in 2020. I mean, I was of the opinion that we were going to see a crash, but nothing with the accelerated speed or anything like this. In fact, many people are trying to build the case that we'll see a V-shaped recovery. That is, as soon as this happens or as soon as that happens, we'll see the market go right back to where it was. I think that's a possibility. It's a less likely possibility than it was, say, 2 weeks ago. And it's also increasingly unlikely without some sort of restoration of hope. And so what I would say, that if we're looking for a bottom in this market, which I'm sure many investors are, I would say that your bottom is going to probably be somewhere between, if we look back historically, somewhere between the announcement of congressional fiscal stimulus that's meaningful, that actually is going to address the issues and provide and restore confidence in the American investor and the American public, as well as the announcement, sometime between that announcement and by the way, as of this interview, the Senate still has not put anything through, or the Congress. So we're assuming that they will. And from that point, anywhere between that point and I would say the announcement of a vaccine, if we haven't hit the bottom by that time, the vaccine, I would imagine, would probably be the bottom. I mean, what's lacking here is hope. What's lacking here is a light at the end of the tunnel. States are closing down. The federal government has a different timeline than other states do. There doesn't seem to be any rhyme or reason as to what's happening here in the United States, and it's all very disarticulated. And I think it has many people just confused. And I think as long as that confusion remains, it's going to be very difficult to build a bullish thesis here. But once we get past some of these things, and especially with the announcement of a vaccine, I think we'll get back to normal. It's going to take some time. And this has been a really strange moment for people. I also think that there's going to be some really hard lessons that we're all going to learn from this. I've already learned a couple. I'm sure those listening to this conversation can think of a few things that we've already learned from this that we can walk away from. And I think that's what we should look for, is we should look for the lessons out of this, that we can become better as a result of this.
What are some key lessons for yourself that you believe you've seen and that you've seen for others that you've talked with?
I think the breakdown of faith in isms is one thing. I think one of the things that many people have put their faith, hope, and trust in is the Fed's printing presses. I think some of them were shocked to see that when the Fed began to print money, the market kept going down. I think people are learning that the Fed is not some sort of panacea, and in fact, it could be more of a problem than a panacea, to be quite frank. So I think we're seeing that. I also think we see some of the political shenanigans. I'm not left. I'm not right. I have no patience for either side, nor any sympathy for either side. I find them both to be repugnant. However, having said that, I think one of the lessons that we have to take away from the political factor of this is that as we were moving into 2020, we had the socialism versus capitalism debate that was ongoing. What's interesting today is that the pro-capitalist White House, anti-socialist White House, has the only solution that they have proposed is what has been proposed by Bernie Sanders. The only thing that they have proposed are the same draconian measures that we see in communist China. We see communist China shut down this virus very quickly because it had the ability to step into the economy and shut things down In the United States, it's very different. We don't have that same ability here. And so the United States is realizing that that's a deficiency for them in a case like this. In an extreme global pandemic, China has an upper hand in the fact that its communist government gives it an ability that the United States and its capitalist system doesn't allow. We've only seen socialism as the option being promoted. I think that's an ironic moment for a nation that views itself as free market capitalist, or it wants to view itself as that. Mm-hmm. And so I think we've learned that. I think there's many things. I'm sure the listener would find it, but I think that we're all going to walk away, learning a lot from this.
One of the things that was underscored for our household in this, at the personal level, was we've been the fish swimming against the stream this whole decade as far as stocking up on household items, and we've even made some advertisements on our channel with tongue-in-cheek of showing entire rooms, filled to the ceiling with bottled water or paper towels or toilet paper, that kind of thing, however,
sort of like a hoarder almost.
Yeah, right. But in a proactive sense, when nobody cares that you're buying a lot of stuff, they just see you as sort of foolish and Chicken Little or whatever. But then all of a sudden, as these last couple of weeks have accelerated, we've been staying home and not going into these crowded store situations. And I've watched in somewhat in concern as I see videos of people scrabbling for the scarce commodities and that sort of thing, or my heart goes out to those who really don't have what they need. We put out a video a week ago, Friday the 13th, talking about don't delay another hour. Go out now, get what you don't have, what you need, and be prepared.
Well, let's give a hand. I mean, really, let's give a hand to the preppers, the people who were prepared, the people who took action ahead of time. They didn't have to, like you said, they didn't have to venture out into the stores and stock up on things that they didn't have because, again, not necessarily hoarding, but simply just being prepared. A righteous man or a wise man, the book of Proverbs says, sees trouble afar off and takes precaution. He sees it coming, and so he prepares. I think most of us, if we were serious or thinking about things, we knew that there are problems ahead. And so preppers, I think, deserve to be commended here. And one of the things that we've been teaching along with you is the importance of creating, financial liberty, exactly what your show is talking about. And we do that through our 5 levels of financial freedom. It's a completely free educational series that we have on our website, followthemoney.com/5 levels. And one of the things we teach there is the need to have 6 months of liquidity, savings, 6 months of savings. And, in reality, many of our students now they were prepared for this. I mean, they were ready for this. They were ready for this moment. And we feel so proud of our students here at Follow the Money. I mean, so many have made preparations. They were prepared for this moment. And I think one of the questions we need to ask is that if individuals are required, or we think that individuals should have 3 to 6 months of financial cushion for the case of an emergency or whatever, and if they don't, then they're just left to the free market. Corporations aren't going to bail them out. Then why don't we think that corporations should also have 3 to 6 months of a cushion? In other words, why is it that we run into 2 or 3 weeks of problems, and corporations who have just benefited from the biggest tax cuts in history and have been living in the quote-unquote greatest economy ever, how is it possible that they don't have a surplus to provide them a cushion to be able to operate for 3 or 4 or 5 or 6 months? How is that possible? And how is it possible that individuals must then come to their aid?
Right.
When they have underprepared, whenever they don't come to the individual's aid when he doesn't prepare. Underprepared people in a free market fail. And unfortunately, or fortunately, however we want to say it, our system is not a free market. We're going to see bailouts of recklessness. And as to why we don't see the Tea Party right now, that's a great question as to where the Tea Partiers are. Where are the free marketers right now? Where is the free market solution in Washington to the free market problem that we find ourselves in? So we have a free market, and we're told we have a free market, but we have no free market solution at all whatsoever. They're all in hiding. All we have are socialist solutions. So it's pretty amazing that socialism is the only option available to us from Washington right now. It's extreme irony.
I want to circle back with you on the earlier statement you were making about people saying they're anticipating. People have been living through this last decade and a half of this extended bull market. And for the longest time, whenever there was some volatility over the past year and a half, I'd say people are saying, okay, well, we're going to buy the dip and we're back off to the races again. And anytime the Fed would even hint that they're going to accommodate or cut rates, or it'd be, oh, great, okay, we got the market's got the medicine it needs. Here we go again. Let's go. Because everybody's used to that's the story. That's the theme, is this momentum upward. And so a lot of those people are still watching for this moment, or watching for when we're going to get this V-shaped recovery. But we've heard the alternate viewpoint over the past half decade in particular of saying, wait a minute, we've got this unprecedented bubble of not only debts domestically, globally, at every level of government and household. We've got derivative complex that's built up to unimaginable levels, and the banks are all riding on and some of the stress tests that went out said even a 4% setback in the market could really undermine some of the bank solvency and so on, Deutsche Bank and others that we've heard about. So here we are, 30+% down on the markets. Why are we? Is it realistic as an economist? This is an economist question. Is it still realistic to be looking for even the possibility of a V-shaped recovery, or has this been the pin that pricked the bubble, and it doesn't matter if you pull the pin out now? The bubble's breaking, and it's just going to come on and have the effect that it's going to have.
Yeah, coronavirus has exposed the financial shenanigans that have been going on underneath the surface. We're seeing that again. We're seeing, again, who would have thought that airlines couldn't handle a 2-week, or 3-week or 4-week or a 3-month shutdown for that matter. These companies were living at the very edge this whole time, apparently. They weren't even prepared for a week of downtime, and it's incredible. So as far as the V-shaped recovery goes, as I mentioned, it's less likely now because of the psychological damage, the technical damage that's been done to the charts, the technical charts. So as far as that happening, is this the bankruptcy of our nation? I mean, I wrote a book called Bankruptcy of Our Nation. I'm staring here at a bankrupt nation. The stock market doesn't tend to care about that. It hasn't cared about that for some time. We've been bankrupt for a while. How do you define bankruptcy? Well, the definition would be if you can't pay your bills. The United States borrows $1 trillion a year to pay its bills. That's not a solvent country. That's not a country, and that's not sustainable. On top of that, now we have our Q2 GDP, which is supposed to go down by maybe up to 50%, according to the St. Louis Fed chief, James Bullard. He's also indicated that unemployment could fall down to 30% in the wake of this coronavirus pandemic, which would be more than what we saw at the very peak of the Great Depression. So we're heading into a new Great Depression. This is a depression. There's no doubt about it. We don't get to have 50% GDP declines and then not, have to deal with the ramifications. It's almost as if we are I feel like I'm standing on the beach watching a tsunami coming. Mm-hmm. And it's in slow motion. There's not really much you can do about it as a person, as an individual, except what we've done is we went to cash. We're watching. But yeah, it's quite stunning. As far as the V-shaped recovery goes, will there be a moment where the market goes back up? Yes. The problem is that, when you think about the national debt right now at $24 trillion, 23.6, whatever it is, 24 trillion, let's just round it up. $24 trillion, that doesn't include all the unfunded obligations. That doesn't include the $5 or $6 or $10 trillion that it's going to take to dig us out of this hole.
Yeah, just this week, there's another 4.5 from the Fed, and another. Yeah, it's just like these numbers are rolling off, and people are saying that's not enough. That's not going to be enough.
Correct. So in other words, this is extreme hubris in the fact that we suppose that our creditors are satisfied right now as we take out cash advances and cash advances. I mean, this is what a bankrupt government does. This is unfortunate. If you look at China, for example, and I know there's a tremendous angst against China, and it's built up just like there was a tremendous angst against the United States in Great Britain at the turn of the 20th century. There was this great jealousy there was this great suspicion. There was this great angst because the British people knew they were being surpassed by the Americans. We're living in a same time now where the Chinese economy is larger than the United States on a GDP, on a PPP basis. It's not changing. And in fact, this is the problem I think that's in Washington right now, is that not only do they have to save their own economy. I mean, everybody has to do that. The United States is in a different situation than any other country in the face of the planet. It has to save its economy, and it has to preserve its global reserve status, its global reserve currency status. And that's a tough thing. That's a very tough thing. In the meantime, China has already mostly recovered from the peak of where it was with coronavirus. It's still dealing with some aftershocks. But overall, it appears as if they're past their peak, and their economy is now opening back up. This has put tremendous pressure upon the White House, because if you know what they've been targeting this whole time, it has been China. There have been in a race with China, and China has largely been winning in its ability to unleash new technologies and get ahead of the curve, 5G, 6G, on and on and on, drone technology, wherever you look. China is on the cutting edge. Cryptocurrency, it doesn't matter. So the United States was already kind of a nickel short, a day late. And then you add this 50% decline in Q2 GDP as a possibility, or 30% unemployment rate. I think the White House realizes that this is the moment that China surpasses the United States. This is the moment. By the way, China has a 4% interest rate right now. They could lower it to zero, but they actually want to attract capital to their country. They're not assuming that everyone wants to lend them money for 0%. They're acting logically, it would seem. The United States is acting illogically because it's bankrupt. It doesn't have a choice. It has to move its rates to zero. It has to do everything that it possibly can to prop up and shore up its fake economy. And as you point out, will the stock market go up? It'll probably go way up, because in the world that you and I live, until it can't anymore, because in the world where you and I live, where the Fed begins pumping in lots of money, that money has to go somewhere. And once the risk appetite returns, they'll probably create an even bigger bubble. So I don't think one of the sad things is that of all the lessons that we're learning, one of them we're probably not going to learn is that the Fed can't save us. That's one that I wish we would learn, but we're clearly not learning that one.
What about, you mentioned China, but what about Russia? We were told over the past month or so that this big crash in oil prices and the breakup of the OPEC meeting and so on, and that's put great stress on the U.S. domestic shale oil industry, was actually fomented by Putin and Russia and a stance that they're taking. How is that strategically meaningful to them, and why did it have the effect it had, and where do you think that's taking us?
Yeah, so that's the other thing that's happening right now, is that in the fog of this coronavirus pandemic, everything else is hidden. The media isn't talking about any more of the wars that the United States is conducting. We're still committing all kinds of wars and prosecuting all kinds of wars around the world. They're not talking about a lot of things right now. And people who like to operate in the dark really enjoy moments like now. And one of the things that we see is that there was a story that came out a few weeks ago, and it was very clever. It was talking about how Saudi Arabia had launched a price war on Russia. And what was missing from that story was the fact that the United States is the number one, everybody knows by now, they're the number one producer of oil because of the shale industry and all of this. So if Saudi Arabia were trying to pick a fight with Russia, it would have to be thereby also picking a fight with the United States. But that part was left out of the mainstream media. And so in reality, Saudi Arabia declared war on the U.S. shale industry. And the voices have been muted because nobody's listening to this. It's all about the coronavirus, which perhaps it should be. But underneath all of this, many oil and gas executives are saying what Saudi Arabia did was illegal. I mean, it violates the law. They didn't have the right to do these kinds of things. But you don't see the White House doing anything about it. Many people don't understand the petrodollar system, and we've written an article on the petrodollar system. It's years old, but it's still as relevant as it was the day it was written. Go to followthemoney.com/petrodollar, and it explains this hideous system that exists between the United States and Saudi Arabia, and it explains why we're buddies with the Saudi Arabians who don't allow crucifixes and don't allow Bibles, and have beheaded Christians and all of this, and they're our buddies. And so it explains all of that. And much of it, of course, has to do with the U.S. dollar and oil. And so this was all posed as a Saudi-Russia spat, but the victim was the United States shale industry. And as to why the White House is silent about the shale industry getting pummeled by the Saudis is very telling. And I think the petrodollar explains much of it. And I would even go a step further and say it's possible that petrodollar system in all of this fog has broken down. I mean, I don't even know if it's still intact right now. I don't even know. So when all the fog clears, again, I think a lot of hard lessons are going to be learned.
One concern from a viewer here, and unfortunately we're running short on time, so we'll only have a question or two from viewers. Bills asks, will money in a credit union be safe? Taking it down to the individual level, and concerned about the potential fragility of the banking system. Are the credit unions somehow exempt from the risks that are posed to the main banking system?
Well, I feel a lot more comfortable with credit unions personally than I do with for-profit banks.
Why so?
Yeah, absolutely. Well, predominantly because they don't serve two masters, right? The for-profit banks, like the big banks that have stocks, that people can buy stocks, they serve their shareholders, and everybody else, it gets in line behind the bondholders, of course. But no, I would rather deal with a bank, with a credit union personally. But as far as whether the money is safe inside, I would say the let me put it this way. I would say the FDIC, if they will not honor what they have said they will honor, that the whole American experiment is over. That's it. So I would say that the only thing that I would ever trust, if I trusted anything in the banking system, would be the FDIC limits. I wouldn't go beyond them. And I would say the FDIC limits, some people say, well, they won't be able to honor it. Well, they're completely able to print money. I mean, they can print money all day long. They can print money and replace your FDIC money, insured money. They can do it all day long. Now, it may not be worth what it's worth, but they can print it. And so I think they'll always honor that, because if they don't, they'd be shooting themselves in the foot. I mean, why would they not do that? They have the printing press. They can. They know that would create mass chaos. But I would never trust beyond the FDIC. And besides all of that, I like to diversify quite a bit, and also keep cash on hand. One of the things we teach is to have a whole month's supply, or 2 months supply if you can, of hard cash ready to go at all times. Some of it in your go bag. You can have it spread out at a few different places if you want. But having cash on hand in this environment, and we're not out of the woods yet. The stock market could still shut down. We could have there could be a social media rumor that sparks bank runs. I mean, we're still in the thick of this, and so I would say to have cash on hand in this environment would be very smart if you don't already.
For those who are looking the next step ahead, there's some concern about the, you mentioned the petrodollar, and whether the United States is going to be supplanted by China as the next era of global financial and economic powerhouse. But back on the family level, some people are concerned that changes like that might, or even other changes that might be at a Federal Reserve and Bank of International Settlements and all, that the World Bank level, replacing the dollar with a world currency, and that our dollars might be worthless. So any concern for people who are looking the next step down the road as far as their dollars being retaining value going forward? Well,
it's a legitimate concern. When the Fed says they're going to just print unlimited, and they don't put a cap on it. I mean, this is what the Weimar Republic did. I mean, how do people not learn from this? I mean, we've been down this road so many times. I mean, we've seen how this story ends. So as far as the printing press, I mean, yes, the U.S. dollar is going to continue to become, I would say, a more risky asset. We have to see on the other side of this. Again, we don't know. We don't want to presume that our creditors are satisfied right now with our decisions. I mean, we don't make these decisions in a vacuum. We're the greatest debtor nation in world history. There has never been a nation that has been a bigger debtor nation than the United States. National debts at all-time highs, corporate debt all-time highs, student loans all-time highs, credit cards all-time highs. We are debt slaves. And as debt slaves, there is one other person that we have to keep in mind, and that is our creditor. And our creditor is watching us as we print money out of thin air, and as we argue about how much money we're going to send each other in the form of checks from the White House, and as we argue and banter about how we're going to dig ourselves out of this hole, there are creditors who finance our way of life, who we live off the kindness of, and they're going to have to agree and assent to the madness that we're currently endorsing. And if they assent to it and agree to it, then maybe we'll live to see another day. If they don't, then we're going to be dealing with massive hyperinflation because those dollars won't be wanted. And I don't know when that moment happens. I know it eventually does happen historically. We know that it has to probably happen to the United States. We're just like any other empire that will rise and then fall. And I would suspect that China is the winner here out of all of this. Which is enough to create conspiracy theories. I think that some conspiracy theories at this moment, might be justified when you consider how China has come out of this just what may be very well. I'm not promoting any conspiracy theories, but I would say if someone did have one, I could probably understand it, because it really is quite stunning how quickly it appears that China is accelerating as the U.S. is still trying to figure out how to stop its stock market from falling.
We've been speaking with Jerry Robinson, founder of followthemoney.com. Jerry, if people want to get plugged into more of your resources, you've mentioned several links along the way. I'll try to put those in the description of this video. And just grateful for you joining us here again, this time on Liberty and Finance.
Yeah, thank you. Yeah, we're all about education, and we want to teach people how to diversify their income, diversify their savings, diversify their investments. We teach people how to trade. We teach people how to get involved in real estate, and there's going to be a lot of opportunity here. So if, when this market finally bottoms and it begins to curl back up, who knows where the future is going to go. But if the markets do go back up, then, in which we believe that they undoubtedly at some point will, because of all of the stimulus at some point, then, and you're looking for research on those topics, some of the stocks we're going to be buying, some of the ETFs we're going to be using, the same ones we used back in 2010, 2011, all the way out to where we are now, we're probably going to be riding this same bubble again. It's incredible. But if you want to learn more about what we do, we put out a weekend newsletter for all of our students. We put out a daily trading idea, short-term trading idea. There's a lot there. Followthemoney.com. We also have a free podcast. We're on Spotify. We're on YouTube, all that stuff. So check us out, followthemoney.com. I really appreciate the opportunity to come on. It's a scary time for a lot of people right now, and I also want to speak peace to all of this for those who are believers in the audience or those who are Christians. Take peace that your hope and trust and faith are not in earthly kingdoms. We have a kingdom that's much higher than all of this. We have a kingdom of God, and I put my faith, hope, and trust in that, and that's where my peace comes from. If I didn't have peace in that, if my peace was in these kingdoms on earth, woe to me, woe to me. Thank you, sir.
Jerry, thanks for joining us.
Thank you.
If you've decided that now is the right time for you to protect your family's financial future by acquiring physical precious metals, gold and silver, I'm delighted to let you know that I have now become a licensed dealer's representative for Miles Franklin, one of the oldest and most trusted names in bullion dealerships. And we can provide you with physical delivery to your personal possession or to professional vault storage or precious metals IRAs. Just email me at libertyandfinance@protonmail.com, and please include your name and phone number in your email to libertyandfinance@protonmail.com. We'll get right back with you and find out how to best meet your needs so that you can either begin or increase your acquisition of physical precious metals now and protect your family's future starting today.